This is the 2025 Forex Trading Empire Mentorship Program Lecture 23. The topic for this lecture is where to focus. In this lecture, we'll be discussing on how to put everything together on the previous lecture, everything has been taught on the previous lecture, how to put everything together to align it correctly, to build a trade plan, and how to execute the trade plan. We'll be discussing on the steps you need to follow for you to learn how to trade any trading model. Where to focus on is one of the most asked questions you can get from a beginner trader, where they'll be asking on where should I focus on which time frame should I look at, even though they already have access to the lectures, previous lecture, but traders mostly still ask about those questions. So I hope that I'll be explaining everything correctly for you to understand where to focus on, and I hope you guys understand on where to focus on when applying a trading model or learning how to execute a trading model. Because learning a trading model is one thing, how to apply the trading model is the second, how to execute that trading model. So first is, what is your trading model? You need to know your trading model, which from the previous lecture I talked about two major trading model, the weekly trading model and the daily trading model. It's either you're going to be focusing on a daily candle or you'll be focusing on a weekly candle. Now, whatever one you do decide, I'll be explaining on how to align both, which they are very similar. You just need to increase your currency when you are trading a higher time frame, which the weekly model is being used for intraday setups where you are holding trade within the week. The weekly model is used for intraday setups where you're holding trade within the week, while the daily trade plan, the daily setup, is where you are taking intraday setup within a day. You're taking trades within a day, which is also known as day trading. So if you're looking to be a day trader, then you'll be looking to stick to the daily bias, which is the daily candle. Sticking to the daily candle is the best when it comes to trading the daily trend. Or if you're focusing on sticking to the weekly trend, you're trying to catch the weekly trend, the Tuesday and Wednesday trend, then the weekly bias will be best for you. So whatever model you do choose, it's very important for you to choose your model. And how to choose your model, you look through your schedule, your own personal time, on what time will you be free. Because I talked about micro time frames, like trading the 3 a.m. to the 4 a.m. setup, trading the 7 a.m. to the 8:30 setup, or trading the 8:30 to the 10 a.m. setup. So whatever time you are free, you can align it with those times, which those times are the New York Eastern Standard Time. You can check it on your own personal country on what time is those setups. Those setups are being based off the London and the New York section. So you look at your own personal time on what time will you be free, what time of day will you be free to decide on which trading model you should stick with. And if you are picking any trading model, it's best for you to stay consistent to that trading model, because in order for you to execute that trading model and understand more on that trading model to gain more experience, because whatever trading model which is being taught in this lecture cannot be applied if you haven't, cannot be applied perfectly or close to perfectly if you haven't gained the experience. And in order for you to gain the experience, you'll be gaining the experience through back testing and forward testing. So pick your trading model. It's very important. When you pick your trading model, the next thing you need to focus on is learning how to anticipate the next candle and the next draw on liquidity. Now, this is the overall market structure, understanding the overall market structure, understanding the next draw on liquidity, and understand and learning how to anticipate next candle, if it's going to be an up close candle or a down close candle. This is very important because that's going to be determining your bias. If you're trading the weekly, you need to understand on the weeks where you're going to be having a high probability setup for price to either create an up close candle or a down close candle. Learning how to anticipate the next candle. The same thing goes to a daily bias. If you are using a daily bias, you need to learn how to anticipate the next day bias when there's a high probability of price creating an up close candle or a down close candle. Those are the days you look for your setup, because those are high probability days to look for your trade entry. So learning how to anticipate the next candle and learning how to anticipate the next drawn liquidity will still be taught throughout the lectures. So after this lecture, I'm going to drop a sub lecture, which is going to be talking about CRT. So on the 2024 mentorship program, I added CRT because it's close. It's like a foundation. It's like laying the foundation on understanding how to anticipate the next candle and the next draw on liquidity. So I'm going to put those videos, those sub lectures inside the 2025 so that I can lay the foundation for you guys to understand how to anticipate the next candle and the next draw on liquidity, which is which are two videos. I'm going to be adding those sub lectures to the 2025 lecture after this lecture. So make sure you go through the lecture, and further on, the lecture 24 is going to be all about anticipating the next candle, which will be explained in that lecture. Well, through the previous lecture, you can see I've explained about you guys understanding how to anticipate the next candle. Learning how to anticipate the next candle and the next drawn liquidity is very important, because whatever trading model you are trading, you need a bias to trade that model. You need to have a premeditated bias, a premeditated direction in which you are prepared to accept the losses and the winning, which is going to come from you trading to that direction. So accepting those direction before even taking any trade is very important in building your confidence for you to stick to your bias, even if price is consolidating or price trades against you. You know that price trades against you, but based off your probability and through your back testing, if you keep on taking trade setup based off that idea, you end up being profitable. So very important for you to learn how to anticipate the next candle on whatever time frame you choose to use on your higher time frame, which is going to be based off your own model, whatever model you choose to trade, and learning how to anticipate the next draw on liquidity. Where is price reaching for? What have price done? And where is price reaching for? Those are one of the most important things you need to understand when trading any particular model. Learn how to align or wait for the lower time frame structure alignment with your bias. Now, this is still important, because after knowing that price is going to trade to the upside, or anticipating that price is going to trade to an up close candle, creating an up close candle, you need to wait for the right time frame alignment. You need to wait for your lower time frame alignment. If not, you might even take some losses even before price gives its hands to you for you to take the right trades, because you don't know how to align your lower time frame correctly. Which on the previous lecture I talked about the lower time frame, talked about specific individual candle on the bias you'll be anticipating on the lower time frame, where I talked about the reversal candle, talked about the trend continuation candle, and talked about the counter trend candle. Those bias are based off the lower time frame bias. Once you are anticipating a reversal candle from the daily time frame, you know that you're looking to enter after the shift in structure on the 1 hour. Guys, I'm talking about the daily bias. You're looking to enter after the 1 hour shift of structure for a reversal candle. The same thing goes to a weekly bias. If you are anticipating a weekly reversal candle where price trades into a weekly fair value gap and you're anticipating a reversal candle, on your lower time frame, you're trading after a 4 hour shift in structure that week. So you need to be patient enough to wait for price to shift structure on the 4 hour time frame before you look for your entry. Very important for you to learn how to align and wait for your lower time frame structure alignment with your bias. This is the part most traders get it wrong, where they don't understand the power of three. You need to understand the power of three. Mark out your opening price in every week or in every day, depending on your model. Mark out the opening price. Know what's above the opening price and what is below the opening price. What will price reach for if it's going to be a trend continuation? If it's going to be a trend reversal, what will price reach for before the reversal? And you look to enter after the reversal. The same thing goes to a counter trend. After price does a shift in market structure, you wait for your entry after the shift in market structure. So understanding how to align your time frame is very important. So if you haven't understand how to align your time frame correctly, you go to the previous lecture where I talked about individual candle, and I will still talk about more on further lectures, discuss more on reversal candle, trend continuation candle, and counter trend candle. Whenever I take a trade, I'll be doing a review on those trades, mostly on Hero USD. Whenever I take a trade on Hero USD, I'll be doing a review on those trade, explaining the whole idea around the trade, which will help you to learn how to align it correctly. So you need to stay current with the lectures, which is very important. Stay current with the lecture because there's still a lot that's going to be taught throughout the 2025 mentorship lectures. So next is picking your currency and back testing before forward testing. Picking your currency is one of the most important parts when knowing where to focus on, because you need to pick a currency you are going to be applying your trade model to. Now, how to pick your currency? It depends on the model you are trading. Now, if I were to trade a weekly candle, a weekly bias, right? Looking for a setup within the week, I'll be trading three non-correlated time currency. Sorry, I'll be trading three non-correlated currency. The point where I'll be trading three non-correlated currency is because throughout the week you're only anticipating one weekly candle, which if your current currency pair is in a consolidation, you don't need to stay to that currency pair. You need to look for a currency pair that has the high likelihood of expanding. So you can add up 3 to 5. You can keep it on the minimum on the minimum of 3 and a maximum of 5, so that you can have many currency to go through. The point is that you are looking for currency with a high probability of either creating an up close candle or a down close candle, and you scroll through those candles, through those currency every week before Monday to look for the currency pair you're going to be trading throughout the week, and don't max out the currency pair that you're trading throughout the week above 3 currency. When the whole 5 currency have the bias, you just pick the non-correlating currency and trade individual currency. Like an example, if I were to pick a non-correlating currency, I'll be picking the Hero USD, Hero JPY, and the USD CAD. You can stick to those three currency, or you can do your own back testing to find more currency, either the New Zealand USD or the Australian USD, to make it to 5 currency, or GBP USD. Picking the currency is something you need to do on your own, and make sure you back test and forward test. Now, why back test the strategy? You need to be sure that your model do works in that currency, because there's some currency you need to make some adjustment because due to the currency time lapse between sections. Maybe that currency pair is more active during the Asian section and you are trading only the London and the New York section. So you can see if you do not do the back testing, you might be missing most of the move even before getting to the chart, because price already traded to your buy during the Asian section. So you do your own back testing to understand where do that currency trade the most, and look for alignment with the dollar. You need to find some alignment with the dollar. It do helps when it comes to buys. Looking for alignment, looking for currency that is aligned with the dollar so that you can easily trade it during the New York section. So back testing is very important. Back testing is the point where you test the strategy, test your model on that currency. Now, if your currency do have if the model do have an edge in whatever currency you do choose in trading, next thing you need to do is forward test it. You need to forward test the strategy. Now, this forward testing do takes time. So during the forward testing process, If you find you have gained the confidence, because the most important thing about any trading model or even being a trader is having the confidence to take a trade. Having the confidence to execute a trade is very important. So during your forward testing, once you gain the confidence and you know that you can risk your own personal money, at first you can start with a demo just to make it more interesting. But when you feel like you are ready to go in, you have seen this model work more than expected, you have seen everything align, you know how to align your lower time frame, you have already learned how to anticipate the next draw on liquidity and the next candle, either the weekly candle or the daily candle, and you already gained the confidence that you can repeat this model multiple times, multiple weeks throughout the year or throughout 3 years to come, then you have the confidence to place a trade with live funds. Which I can tell you, I can't tell you the personally on when you are ready to do such upgrade or such development to your trading career. I can't tell you when you are ready to risk live funds, but I can tell you that it's a personal feeling. You need to feel it before you actually risk your own personal money, where you are ready to take the losses and you are ready to take the wins. You're ready to take the risks involved in trading that model. And for you to gain a result or even gain enough data to gain that confidence, you need to back test and forward test. You need to back test to see if it works on the currency, if it will be needing any adjustments, or if it works directly with the currency, and forward test it to see if you can apply it correctly. So you can see you can't skip through any of this process. You just have to stick to this process. And if you're looking to be profitable, these are the process you need to stick with. First, know your trading model. Very important. Once you know your trading model and how to know trading models for you to apply, you can go to the previous lecture, which if you have watched the lecture before this, you understand that I've talked about the weekly and the daily. Now you can still trade the monthly candle. You can easily trade the monthly candle, which I will be doing a video on the swing trading model. The two model I talked about is not much of a swing trading because you're not even taking any trade above the 15 minutes. Your most trade is going to be taken within the 15 minutes and the 5 minute, 3 minutes, 1 minute. Unless you learn how to do it personally. But I'll be talking about a swing trading model, which you can trade more than 5 currency when trading that swing trading model. In a month, you're only looking for a few setup, like 1 or 2 setup a month. So those are people that are not that available to take trades and they do have lower times. But we'll talk about it on further lecture. But you can easily apply this lecture if you learn how to trade the monthly candle. It's just understanding the monthly candle. If you can anticipate the next draw on liquidity on a monthly time frame, then you use a daily time frame as your bias, as your lower time frame alignment structure. Once the lower time frame, that is the daily time frame, is aligned with your bias, then you can use your 1 hour as your entry or the 4 hour. So you can see you can easily apply it based on what I just explained. It's still the same thing of trading the weekly candle or the daily candle. But I will do an example on it on further lectures. But make sure you know your trading model that you're planning on trading. Now, next is learning how to anticipate the next candle. Remember, the whole foundation on the model which is being taught in this lecture is about learning how to anticipate the next candle, learning how to anticipate the next draw on liquidity and the next daily, weekly, or monthly candle. Once you learn how to anticipate those candles, you can easily apply any of the model which is being taught in this lecture. So you need to learn how to anticipate the next candle, which on lecture 24, that's going to be the sole purpose of that lecture. Then you can repeat it multiple times, create a schedule for yourself to repeat it multiple times, practice on it so that you can understand and grow the skills of learning how to anticipate the next candle and the next draw on liquidity. Now, learning how the next you need to learn how to trade your lower time frame, because now you already have a bias to trade to. You just need your lower time frame to align with the bias. So learning how to align the lower time frame is very important to whatever bias you have for that week or day or even a month. learning the lower time frame alignment is very important, the lower time frame structure and how to apply it correctly. And the picking of the currency, very important. Back test before you forward test. Back test to see if you can make any adjustments. Forward test to see if you can execute it correctly. So I've talked about the process which is being used. You can watch this video a few times. If you find any of the step difficult, you can just watch through it a few times and try to go through this process correctly. Don't skip any of the process. They all come to the trade ideas that I do trades. They all gave me my results. So that's why I'm giving you guys where to focus on, where you can aim your focus on, stick to it correctly, and I give you 3 months or so. If you can do it correctly, I can give you 3 months or so. You're already at that stage where you can risk your live funds. It do take time for you to back test and forward test. It do take times. The other steps are easy to decide because those are those decision or learning. They are easy to learn. You can easily learn how to align your 1 hour time frame or your 4 hour time frame, whatever time frame you choose to use. Maybe in a week or so, you can easily learn how to align it. But to back test it and forward test, that's the process that's going to take time. It needs to at least forward test it for a month, see if you can apply it correctly throughout a month, see if there's any adjustment you can make. With the process, you're supposed to go through that process personally. So that's all for this lecture. See you guys in the next lecture after the subtopic.